Why cryptocurrency matters today. Imagine a world where your money isn't controlled by any government, where you can send it across the globe in seconds, and where new financial opportunities are created every single day. This isn't science fiction, it's happening right now through cryptocurrency. Over the past decade, cryptocurrencies have exploded in popularity, transforming from a niche tech curiosity into a global financial revolution. Bitcoin, Ethereum, and countless others are now part of everyday conversations, investment portfolios, and even government discussions. But for many people, the world of crypto still feels confusing or even intimidating. How does it actually work? Why does it have value? And is it something you should care about? In today's video, we're going to break it all down in simple terms. Whether you're a complete beginner or just looking to sharpen your understanding, you'll learn what cryptocurrency is, how it works, and why it could reshape the future of money. What exactly is cryptocurrency? At its core, cryptocurrency is a form of digital money that exists entirely online. Unlike the dollars in your wallet or the coins in your pocket, cryptocurrencies have no physical form. Instead, they live on decentralized computer networks around the world. What makes cryptocurrency different from regular money, like the US dollar, is the technology behind it, cryptography. Cryptography is a method of securing information through complex codes and mathematical algorithms. It ensures that every transaction is safe, transparent, and almost impossible to fake. Another key difference? Traditional currencies are issued and controlled by governments and central banks. Cryptocurrencies, on the other hand, are decentralized. No single authority controls them. They are maintained by a global network of computers that verify and record every transaction in real time. Bitcoin, the first and most famous cryptocurrency, was launched in 2009 as a response to the global financial crisis. It introduced the idea that money could be independent of banks and government policies. Today, thousands of different cryptocurrencies exist, each with its own purpose, value, and community. But how does all of this actually work behind the scenes? Let's take a closer look at the technology that powers these digital assets. How does cryptocurrency work? At the heart of cryptocurrency is a revolutionary technology called blockchain. Think of blockchain as a public, digital ledger, like a massive spreadsheet that records every transaction ever made. But unlike traditional ledgers, this one is maintained by thousands of computers across the globe, not by a single company or government. Every time someone sends or receives cryptocurrency, the transaction is grouped with others into a block. That block is then verified by participants in the network, often called miners, through a complex mathematical process. Once verified, the block is permanently added to the chain of previous blocks, hence the name blockchain. There are two primary ways cryptocurrencies validate transactions: proof of work and proof of stake. Proof of work, used by Bitcoin, involves solving complicated math problems to secure the network, which requires significant energy. Proof of stake, a newer method used by cryptocurrencies like Ethereum 2.0, selects validators based on the amount of cryptocurrency they hold and are willing to stake as collateral. This process is faster and more energy efficient. Because the blockchain is decentralized, it's nearly impossible for hackers to alter the records. Every participant has a copy, and any attempt to cheat would require controlling most of the network, an almost impossible task. This structure not only makes cryptocurrencies secure but also eliminates the need for traditional banks or payment processors. Now that you understand the basic mechanics, let's explore some of the most popular cryptocurrencies making waves today. The most popular cryptocurrencies you should know. When people think of cryptocurrency, the first name that usually comes to mind is Bitcoin. Often referred to as digital gold, Bitcoin was the first cryptocurrency ever created and remains the most valuable and widely recognized today. It's seen as a store of value, much like gold, but in a digital form. Right behind Bitcoin is Ethereum, another major player in the crypto world. Ethereum introduced the concept of smart contracts, self-executing agreements written directly into the code, opening the door to decentralized apps and entire new industries like DeFi and NFTs. Other notable cryptocurrencies include Solana, known for its lightning-fast transaction speeds, XRP, designed for quick and low-cost international payments, and stablecoins like USDC and Tether, which are pegged to the US dollar to reduce volatility. Each cryptocurrency serves a unique purpose, but they all share the common goal of revolutionizing how we think about money and value. So, why are so many people drawn to investing in these digital assets? Why people invest in cryptocurrency? One of the biggest reasons people invest in cryptocurrency is the potential for massive returns. Unlike traditional markets, the crypto space is still relatively young and volatile, which means prices can swing dramatically, creating opportunities for significant gains. But it's not just about quick profits. Many investors are drawn to the idea of decentralization. Cryptocurrencies offer a way to store and transfer wealth without relying on banks, governments, or traditional financial systems. This is especially attractive in times of economic uncertainty or inflation, where traditional currencies may lose value. Some people also see crypto as a bet on the future of technology. Blockchain innovations are reshaping industries far beyond finance, from supply chains to healthcare, and early investors hope to ride the wave of this technological revolution. Additionally, the crypto market offers new financial products like decentralized finance, DeFi, where people can earn interest, take out loans, and even trade assets without a middleman. Of course, with opportunity comes risk. Before diving into crypto investments, it's crucial to understand the potential downsides as well. Risks and challenges of cryptocurrency. While the potential rewards of cryptocurrency can be exciting, it's important to recognize the significant risks involved. First, there's extreme volatility. Cryptocurrency prices can skyrocket overnight, but they can also crash just as quickly. A market move of 10% or more in a single day is not uncommon, making crypto much riskier than traditional investments like stocks or bonds. Security is another major concern. Although blockchain technology itself is highly secure, individual users are vulnerable. Hacks, phishing attacks, and lost private keys have caused millions of dollars in losses for unsuspecting investors. In crypto, if you lose access to your digital wallet, there's often no way to recover your funds. Regulatory uncertainty also casts a shadow over the crypto world. Governments around the world are still figuring out how to regulate cryptocurrencies, and future laws could dramatically impact their value or usage. Finally, the space is still relatively new and filled with scams. From fake projects to pump and dump schemes, investors need to be extremely cautious and do thorough research. Understanding these risks is crucial if you're thinking about getting involved. So, with both opportunities and challenges ahead, what does the future of cryptocurrency really look like? The future of cryptocurrency, what's next? The future of cryptocurrency looks both exciting and unpredictable. On one hand, major companies like Tesla, Visa, and PayPal are already integrating crypto into their services, signaling broader mainstream adoption. Countries are also exploring the idea of central bank digital currencies, or CBDCs, inspired by the innovations of crypto technology. At the same time, stronger regulations are almost certain to come. While this may create short-term uncertainty, many experts believe that clear regulations could actually help stabilize the market and encourage even more growth. New technologies like Layer 2 solutions, decentralized finance, and blockchain-based gaming are pushing the boundaries of what crypto can do. These innovations could change how we interact with money, contracts, and even the internet itself. While no one can predict exactly where crypto will go, one thing is clear: it's a revolution that's just getting started. And those who understand it early will be best positioned for what comes next. If you found this video helpful and want to stay updated on all things crypto and finance, make sure to hit that subscribe button. Leave a like if you learned something new, and let us know in the comments, what are your thoughts on the future of cryptocurrency? We'd love to hear from you.